Hello traders, happy new year to you all. This video is about how to use the Elliott wave principle on the 5 minute chart. Alright, today is the 5th of January 2013 and the time in London is 20:46 p.m. in New York 15:46 p.m. Happy New Year to you all. We are looking at the Euro USD. Okay, you see here, Euro USD currency pair. This trading tips or this trading strategy is valid for futures, for stock, and for commodities on the 5 minute chart. All right. So this is the Euro USD on the 5 minute chart. I have done all my work for you. And you can see 5 Elliott waves. One from first wave from here to this level here. Second wave from here down to this level here. I hope my voice is following the cursor from this point up to this level here. This is the third Elliott wave. From here down to this level here, that's the fourth Elliott wave. And from here to this level here, that's the fifth Elliott wave. As always, we have a guideline. So the first Elliott wave is the wave that will pop out of the consolidation zone. All right. You see this tall candle here? I hope you can see it on your chart. This one from here, you see? Boom, up to this level. See? From here, boom, one candle pop out of the consolidation. The first Elliott wave, the characteristic of the first Elliott wave for the uptrend should be very bullish. Characteristic of the first Elliott wave in a downtrend should be very bearish. And also looking on our left hand side, resistance must be broken. When we are trading, we are looking on the left hand side. When we are driving, priority to the right. So first, the way you see here, tall bullish candle. All right. Now, the second thing I want to mention to traders here, when we are using the wave principle on market noise, 5 minute, 3 minute, 1 minute, 30 second, whichever time frame you are on, playing with the market noise, okay? We try to be very flexible because the patterns sometimes are not very clear, like on the higher time frame, but the wave principle is a fractal patterns, okay? The wave patterns are fractal patterns, okay? So first area wave from here up to this level here. Some trader may say to me, Joe, that's not true. All I say to trader, this is my count, okay? From here down to this level here, that's the second area wave. Alright, you can understand that on the 5 minute chart it's not very clear, but my guidelines is okay. Consolidation, breakout, telling me first wave. The second wave must not cancel the first wave. Alright, so shouldn't go to the low of the first wave, shouldn't go. That's the theory, okay? Now, also looking on our left hand side, we will prefer to see first a downtrend before an uptrend. So this is a normal talking about how we deal with the wave principle, the market pattern first. There was a downtrend, okay, for the euro. Did you sell? All right. So if you didn't sell, it means that either if you are TSTW24 trader, you didn't pay attention to the first best time frame, and also you didn't draw your channel. It was in a bearish channel, so you should be selling. Okay. That was for Friday, last Friday, okay? I mean, day before Friday, you can see on the 3rd of January, on the 2nd was in the bearish channel. And also, you can see here on the 4th, right here, you see, because today is the 5th. So Friday, you can see consolidation, breakout, retest, boom, third area wave. All right. I'm a bit excited now because I was eating some of the beautiful Indian food. Gorgeous food. So from here you see okay, can you see? Try to play with this 5 minute chart from here up to this level here. That's the third Elliott wave. All right, should be the longest wave, should not be the shortest wave. Sometimes, ladies and gentlemen, the way I see it, sometimes you may see some funny stuff in this market, okay, but shouldn't be. All right, the fourth wave to this level. When you see, the fourth wave should not overlap the first wave, shouldn't come into the space of the first wave. That's the theory. But sometimes, you may see sometimes weak, going into that space before quickly closing above it. Alright? I don't know whether some traders are doing it to fool Elliott wave traders and to confuse them. But a lot of things are happening in these markets. So this is the fourth wave and the fifth wave right here. Alright? So How can we use the area wave on a 5-minute chart? Now, the biggest mistake is to just come on a 5-minute chart and start counting wave anyhow. That's one thing you don't want to do, all right? So the same thing when we are using our trading tool, I say to traders, do not make a trading decision on one single time frame. Completely wrong. Trader will go on a 50-minute chart, stochastic overbought, sell, stochastic oversold, buy. The stochastic, when it's overbought, is highlighting a resistance level. The next question, is it a valid resistance level? Stochastic oversold is highlighting a support level. Is it, okay, a valid, okay, support level? The higher time frame commands the lower time frame. So when we want to use the wave principle on a lower time frame, like 3 minutes, 5 minutes, 2 minutes, we want to use at least a higher time frame so if an Elliott wave cycle is about to begin, a bullish Elliott wave cycle is about to begin, it must start from a valid support level. If a bearish Elliott wave cycle is about to begin, it must start from a valid resistance level. Very often, according to the market patterns, ladies and gentlemen, we will see that if we're going to have a new bullish cycle, most of the time, in normal market condition, we will see a bearish cycle, then a consolidation, then we will see now a new bullish cycle starting. On the other hand, if a bearish cycle is about to begin, we are likely to see on our left-hand side a bullish cycle, a consolidation or a correction, and then we see the bearish cycle starting. Always, a bearish cycle will start from a valid resistance level. We will check the fundamental and the technical. Very important. It's not because we are using the Elliott wave that we just come and place a trend like a Friday. This is Friday session here. Okay. So we want to know the time of the day. So this is a Friday. You can see the vertical. This is Friday the 4th. All the zones is the Friday. It's a non-farm days. So non-farm data day. So you need to be careful. So you're going to place a line here. The 1:30 p.m. London time, which is 8:30 Eastern time. You don't want to mess around with the non-farm data. All right? You don't want to. Whatever you'll be kaput. All right? A bit of German for you. You'll be completely kaput. You don't want to do that. All right? The economy news. Get it. Take it from me. All right? So don't we on a 5-minute chart playing at this? We want to apply the market principle. We don't want to violate the market principle, and we don't want to violate the market patterns. The market patterns are different from the price patterns. Okay? And also we want to understand what is the Elliott wave cycle. Okay? So if you go to www.youtube.com/24 Elliott waves, you can understand what is the Elliott wave cycle. The Elliott wave cycle is composed of the motive waves. The motive wave is 1, 2, 3, 4, 5. That's the motive wave plus a correction. So motive wave trending first plus corrective first. That is what is Elliott wave cycle. So I'm going to place here a vertical line. You see, this is the beginning of the bullish cycle and the beginning of the Elliott wave cycle. That Elliott wave cycle has ended here. All right? No, not here. My apology, traders. Has ended here. I will explain myself. Though we see 1, 2, 3 didn't end it here, but it ended here. It's a bit messy here. I will explain to you because this is a complex kind of situation here. I will explain to you. It ended here. All right. But the key point I want you to remember is not that your wave count should be correct, but your selection of the direction. So if you are buying, even if you count your wave wrongly, but you buy here, it's not bad. So if you think that it's the end of the correction, or you think it's here, but the important thing that you are making an excellent decision, you buy. You want to buy instead of selling. So the direction is the most important thing, all right? So to summarize quickly, we don't want to just use the wave principle on a 5-minute chart. We want to use actually one higher time frame, which means we want to highlight a valid resistance level from a higher time frame before switching to the a lower time frame, either 3 minutes, 2 minutes, 30 seconds, 5 seconds, 1 minute. You'll be amazed how traders are using the wave principle on a lower time frame. Here I'm using 5 minutes. So I count 1, 2, 3, 4, 5 waves. I will say to myself, this is the motive wave. Everything's perfectly okay according to the motive characteristics. Talking about using the wave theory because I don't want to offend some of my Elliott wave traders. They don't like it sometimes because I'm a type of trader that is more flexible than other traders, okay? Use too much common sense. All right. So right here, motive wave ended here, corrective wave ended here. Which type of correction we have here? Now you will notice that if you go to our YouTube channel where you are watching this video now, I want to open it for you, the 24 Elliott Waves YouTube channel, where I'm concentrating only on the wave patterns. I have posted a video recently. I'm just waiting for the page to load. This is the page that you see how to recognize an Elliott wave okay, pattern. This video here. So very important that you watch this, you study this, so you may know what I'm going to talk about now. I'm going to talk about okay, a flat correction. All right, a flat correction. Okay, all right. A flat correction is composed of ABC, ABC, all right, and 1, 2, 3, 4, 5. ABC, ABC, 1, 2, 3, 4, 5. Now, on this family chart, you can see that after the 5 wave, the correction has started, okay? We see here the pink line. Pay attention carefully. A, let's make it big. Am I talking to myself so you can see what I'm talking about? We want to see the pink line now, all right? From here to this level here, that's the A corrective move. From here to this level here, that's the B corrective move. From here to this level here, that's the C corrective move. But from here down to this level here, that's the A corrective move of the flat correction. That A corrective move of the flat correction has been divided into 3 waves. But now, today we say it should be 5 waves. 1, 2, 3, 4, 5. If you see like this, because we're on a lower time frame, you want to zoom into it. Maybe you switch to the 1 minute chart and you may see that it has been divided into, okay? But the flat correction is A, B, C, A, B, C, 1, 2, 3, 4, 5. Repeat, flat correction, A, B, C, A, B, C, 1, 2, 3, 4, 5. You may say to me, George, is this 5? Okay, we will get back to that, okay? So, A, B, C, A, B, C, these 2 waves, this is a double retracement. Price went down and retraced back up. Down and up again. So this is a double retracement. All right? ABC, ABC, double retracement. Okay, I don't want to go into the detail of a different type of flat correction. All I want you to remember, this is a flat correction. ABC, ABC. Now we are waiting for 1, 2, 3, 4, 5. On this 5 minute chart, if you look carefully, it doesn't look like a 5 wave. So if I say to you now this is a 5 wave, you may say to me, George, you are lying, okay? And then I will turn around and say to you, this is my account, leave me alone, all right? So, but look, ABC, it's a 3 waves. But look, if you see it like this on the 5 minute chart, you'll be wondering, it should be 5 waves. Let's go now to the 1 minute chart and see whether this session, I'm talking about this session, okay? ABC, whether it's divided into 5 waves. So we can't see it on this 5 minute chart, but if you go on a 1 minute, we can't see it on the 5 minute chart, but if you go on the 5 minute chart, this is the 1 minute chart, I want to zoom into that session. I'm talking about this session here. Moment, please. As I'm playing with this, okay, you can see here this session A, B, C. Okay, that's what I've drawn on my family chart. Let's zoom into that session. Okay, follow me carefully so you know exactly. I'm in this session. I will remove my lines on this session. Okay, talking about wave, how we can use the Elliott wave on the 5 minute chart. Okay, so you can see clearly that we have a 5 tiny wave. Let me draw the lines and then I will highlight it for you. There's one move down on this 1 minute chart from here down to this level. And you can see up to this level. Okay. You see, again here. 4, 5. Can you believe it? 1, 2, 3, 4, 5. Can you see it on the chart? So what we were looking at on the 5 minute chart, we zoom into it on the hour, on the one, what we were looking at on the 5 minute chart, we zoom into it on the 1 minute chart, we can see that in fact it's 5 wave. Price went down, price went up, price went down, price went up, price went down. That is a 5 wave. Let's go back again, ladies and gentlemen, to the 5 minute chart. So now you may say to me, George, I love you because the Elliott wave theory, that's what I want to apply. But look, whichever tool you are using, you must, okay, combine it with the trading triangle and the market principle. The experience count, ladies and gentlemen. it looks simple here, but it's not that simple when the market is moving in real time. Okay. Okay. So now you see. So this is on a 5-minute chart. Before I was putting only 3 lines here. I dropped. So if it's not clear on one time frame, switch time frame, because if you are going to the lower time frame, what you are doing, you are zooming into it. If you are going to the higher time frame, you are zooming out of it, okay? You want to see the bigger picture. So, ABC, 1, 2, 3, 4, 5. But in this case, as I explained to traders, the low of the C wave, so this is from here to this level here, that's the A corrective move of the flat correction. From here to this level here, that's the B corrective move of the flat correction. From here to this level here, that's the C corrective move of the flat correction. The flat correction is ABC, 1, 2, 3, 4, 5. The low of the C corrective move did not go below the low of the A corrective move. The first thing that is coming to our mind is which type of flat correction is that? A running flat correction. Ladies and gentlemen, my goal is to simplify the wave principle and make it more accessible to ordinary traders. So I don't try to use difficult words, as some of my Elliott wave colleagues disagree with me that why are you not using the word that you're supposed to use. I try to make it simple for traders so they may understand this a bit complicated subject. So this is a running. But in normal condition, as some of my Elliott wave traders will start hitting their table, say, George, come on, this is not. Because, they will say, George, because the B should be, okay, a bit above, okay, the A corrective move. Now this brings us again to the point that I was making to you, that when we are counting a wave on a lower time frame like this, 5 minutes, 1 minute, we don't want to be too rigid, okay? We want to be flexible, more tolerant, try to understand what the price is doing, what's going on with the market noise, so we do not fail to recognize beautiful pattern. Right here, I bought the euro, right here. I bought it here, all right? And blah, 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 people wasting your time. How come can they waste our time, okay? They shouldn't waste our time. They should be boom, 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 boom. We get paid, we come out, and, okay, we rejoice. But you can see other traders were selling big time here, okay? But now, talking about market principle, ladies and gentlemen, this is the key. You want to buy at a value support level. You want to sell at a value resistance level. You recognize cycle. Is the cycle a bullish cycle? A bullish cycle, in normal conditions, should start from a value support level or above a resistance level. Yes? A valid bearish cycle should start from a valid, okay, resistance level or below, okay, a valid resistance level. Break below, retest, turn around, okay? So now, as I've counted my wave like this, why I was happy to participate in this trade here. Why? Alright, why? If this was a resistance zone on a higher time frame, I will not take part into it because the higher time frame commands the lower time frame. This is about how to use the wave principle on the 5-minute chart. So I will show you now, just to show you quickly. We go to the daily chart, okay? Let's be a bit curious. I know some traders don't like the daily chart. They like only the 4-hour chart or maximum the hourly chart. I'll go even to the yearly chart using the smart media line, okay? Be curious. If your broker is giving you, my broker giving a yearly chart, I'm very happy and grateful about that. So rejoice for that, okay? So now what I'm going to do, we're on the daily chart. You can see here, daily chart, Euro USD. Let's go back before. Let's go back quickly to the 5-minute chart again. I want to draw a line. I want to show you a key level where I told you that I entered the trade. Right here. Okay. Exactly at 10319. 10319. That's no, that's not exactly that. This is 10309 here. I'll show you. Hold on. The cycle, in fact, has started at, in the zone of 10309. 103. That's the level. That's what I remember. Some 103. Look here, please. Look on this section here. Then you can see the level that I'm talking about. 10319, 10319. Okay, are you following me, please? That's the line, the horizontal line. You see it? Okay, I will draw a line there. Okay. Somewhere, am I fooling myself again? Okay, let's do it like Lavoisier. Okay, exactly. Okay, so I don't trader don't come and okay knock on my door and say, George, what were you talking about? Okay, let's use turquoise this time, and don't forget that level. Okay, it's a very important level because we can see that the first Elliott wave has break above that level. It's almost near its key levels on a higher time frame. Okay, 10319, or call it 10320. Okay, now let's go to the daily chart. Pay attention, ladies and gentlemen, on the daily chart. You see, this is the previous day before Friday. So those who are okay conservative day traders, how do they trade? They will highlight the range of the previous day, the high. You can do this on a monthly chart, quarterly chart. They will highlight also what I'll do. I'll move my line a bit down so I can put the low. So I'm just going to put my low of this candle. It's not exactly bad. I'm going. You understand what I'm trying to do now? I'm trying to put the low for this candle, but it corresponds exactly to the turquoise line. So just think of it: the high, the low is the turquoise line, and it will place also the median line of that range. Okay, so their strategy is either to buy at the low of the previous day if the market is bullish, and or to give priority to bullish signal above the median line of the previous day range. It's just a simple but powerful way of day trading. The high, the median line, and the low. When a new week has begun, as I explained to traders on Facebook page, Stochastic Mardi Facebook page, I told them about the weekly chart. A new week has begun because we take it week by week. Friday markets close. It's a powerful. The high of the previous week, the low of the previous week, and especially on Monday. You see, on Mondays, okay, and the median line. In this case, we can use the daily chart. That's the high, the median line, and the low. Check the low of this candle. I want you to pay attention to this level here. I don't need to move the line. Look on your top right corner of the screen. You will see a small square. Can you see? You see that Thursday, 1st of okay. Can you see? All right. You see Thursday, the 3rd of January, 2013. I'm talking about the small square with the right inside. Can you see the low? The low for that day, or the day before Friday, which is Thursday, is 13019. Exactly, you see, that's the turquoise line. That's where the cycle has begun. The low of the previous day is a support level. All right? Now you can see the price was doing something fast. The price was bearish. Okay, so even that, look on the daily chart, you can see that the price, you see this level, horsepower trading zone, was a horsepower trading zone. You see, horsepower trading zone, changing direction, came back, you see here again, retest it and change direction on that line. Okay, price break above, break below it, you see, again, same level. That's where on the 5-minute chart, okay, our new cycle, okay, has begun. As I explained to you in this video, or I demonstrate to you in this video, we can apply the wave principle even on the 5-minute chart, on the 1-minute chart, on the 30-second, on the 2-minute chart, and I have posted more video at www.24elliottwave.com where I trade live the Elliott wave patterns on a live chart on the lower time frame. In this video again, I'll show you how one can use the wave principle on the 5-minute chart like a professional trader. All right. So at this point in time, as we counted 1, 2, 3, 4, 5, okay, and we see also a running flat correction, ABC, ABC, 1, 2, 3, 4, 5. From here to here, that's the A. From here to here, that's the B. From here to here, that's the C, forming the flat correction. Because the low of the C did not go below the low of the A, We are talking about a running flat correction. In normal condition, the B should be a bit above, okay, the top of the A. But in this case, we are tolerant, we are flexible, okay, and we are using a common sense. All right. If you like this video, feel free, okay, to rate it, okay, and remember, okay, to subscribe to our channel, okay, so you may, okay, be the first to watch this type of video. If you like the video, be free to share it on Google Plus, all right, Facebook, okay, Twitter, okay, all the social network. Share it with your friend. Why is it important to share? I will explain it to you very often. As I'm showing you this video, you enter the trade here, okay, you can see some other traders are selling. And it wastes your time, and sometimes you can get angry about it. But they have a valid reason to sell because they are selling here on the family chart. But we know that there is a valid support level right here, and a cycle has begun. That cycle has ended here. One cycle has ended here. But because it's a running flat correction, we want to buy. We don't want to sell. So you understand why it's so important to assist other traders to understand the language of the price so they do not waste our time next time we are buying. So we all together buy and we are rewarded all together. All right? I hope you have enjoyed this video that you will put into use, okay, to make excellent trading decision. We are the TSTW 24 traders. Speak to you soon.